It appeared today as though an everything rally was occurring, and to the untrained eye, it might appear that a tremendous rally is going to occur and we're going to break out of this range. And while I can't rule that out entirely, I can look at the fundamentals and say there's no reason for that to occur. As a matter of fact, I think the whole chart is crazy. And if you look at when we got the highs came just hours after Powell spoke. If you watch the video after Powell spoke on this channel, you'll remember we said the Powell speech was hawkish. The market hasn't hit new highs since just a few hours after that. So that should tell you something. But nonetheless, the market is being crazy. Bitcoin is up 8% today. Dogecoin is up 5% in the last several hours. And oil was down over 2% at one point today and closed around down 0.5%. So there's a lot of craziness going on in the very short term. But we have to look at that all as noise and stick to the fundamentals, which are deteriorating and not good for equities. Yes, I see the retail sales. Expect the Fed to continue to be hawkish. Get that through your head. Inflation is not good, okay? Last year, we saw strong earnings, we saw high inflation, and the stock market was down 20%. So, yes, strong earnings and inflation might, whatever, you can, say, oh, retail sales is good, soft landing, jobs, soft landing. That's not the picture here. The picture is interest rates and slowing growth. We're trying, at least the market right now, is trying to adopt and exist within the previous paradigm. The 0% interest rate, 20% annualized growth paradigm. What you need to understand is those two factors, the growth rate, what you can expect in the future as an investor, what you're trying to get in the future, and the risk-free rate of return, interest rates, is what determines what you price a stock at. Obviously earnings, but the growth rate in earnings is what you can expect. That's what differentiates Apple from an energy company, is the growth rate. Right now, we're seeing Apple not grow. We're seeing them contract. We're seeing Microsoft not grow at its previous growth rate. As a matter of fact, growth rates are coming down. Amazon didn't turn a profit last year. Google showing serious signs of weakness. Today, despite all the rallies, we're seeing individual names that have had a big run here begin to pull back. And I think this is going to be the start of a broader pullback. The names I'm talking about are Microsoft and Meta. These have been two rather resilient stocks so far this year. Apple obviously should probably be thrown in that bucket. We'll see what happens there. But I think this is getting a little out of hand here. This everything rally, this Bitcoin up 8% today, it's getting out of hand. The Fed is increasing interest rates higher than we thought. Higher. Higher for longer used to just mean, 5 to 5.25% into next year. Now it's we may or may not get rate cuts next year and probably 5.5%. And if you ask me, after today's retail sales and after the last CPI, both of which came in hotter than expected, it's probably going to be even higher than that. It's probably going to be even higher than that because February is going to be strong, okay? Interest rates were also lower this month. We saw equity gains this month. We saw tremendous jobs last month and so far this month. So it's probably going to be a pretty strong month. And a pretty strong month means high inflation. And high inflation means tighter Fed and stocks go down. As I said, while we are seeing slower growth rates, slower earnings, we had strong earnings last year. And the market continued to fall. So who knows what's going to happen? The Fed says the full effects of the tightening are yet to be felt, and the full effects of the full tightening is also yet to be seen. So the picture is just not good. And we're seeing what could be the last stages here with Bitcoin up 8% on a nothing day. Charlie Munger, a 99-year-old who knows a thing or two about investing, believe it or not, came off on crypto today. I watched that whole thing. He's called it crypto crapo. Super weird phrase, but funny nonetheless. Maybe that galvanized some apes, and that's just not the way to do this. It's just not the way. I think the way is to fight those people and not the Fed, because if you fight those people, obviously I'm not trying to, spread any hate. I think everyone doing their own thing is a great thing, but you can't fight the fundamentals. You can't fight the Fed. That's just the way it is. That's what always wins. It's won last year in a lot of people's faces. That's what I'm very confident is going to win again. So we'll see what happens, but it's an interesting environment to say the least. So Bitcoin up 8%, stock market I guess rallying a little bit into the close, but at the end of the day it's like we're up 0.2%. That's nothing. It's no big deal. We're not at new highs. We're not pushing new highs. Look at the highs. We made them after the Powell thing. Everyone wants to price based on, where we've been the last couple weeks. We should have gone down after Powell. We should have gone down after CPI. We should have gone down after all these things, and we haven't. And that is consolidating. That is still there. That fair price for the market still exists, and it's going to be realized. It always is. We've been here before. We've been in bear market rallies before. We've seen this with oil before and oil stocks before. This happens. This is what makes this profession and this market thing very challenging, very difficult. Nobody bats 1,000. That's just the way it is. But it's gonna happen. It's gonna happen. Just you watch. Just you watch. It's gonna happen. So that's today's video. We will see what happens. Until next time, peace out.